The glory days for home borrowers are over. A little-known 42-year-old Melbourne man hits it big time in crypto, and Subway, the food chain, makes a remarkable turnaround. Welcome to Fear and Greed Business News, Australia's best business podcast. It is Monday, the 31st of July, 2023. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, after the show, you have a great chat coming up today with Mark Freeman, who is the Managing Director of the Australian Foundation Investment Company.
Perfect timing, given that we really get into profit season in the next month or so. I mean, officially, it actually kicks off next Monday. The 7th of August is actually the kickoff. But we talked to Mark today all about the key themes to expect in reporting season, the companies that Australian Foundation Investment Company, AFIC, is interested in. AFIC, of course, is a listed investment company, trades on the exchange, why you might invest in LICs rather than managed funds. It just kind of Mark's take on the market at the moment. Very, very fascinating.
Yeah, it is a good chat. It's coming up later on. The main story, though, this morning, Sean, the days of great deals from home lenders are over, with new home loan rates rising by more than the official interest rate and fixed rate loans shifting higher.
You might not realise it, but home loan borrowers have had a great time of it in recent years. Ultra-low home loan rates, mostly because of the policy response to COVID, and incredibly aggressive competition in the market. But obviously rates are rising, we know that, and new figures show that lenders have taken their foot off the competition accelerator in an effort to recoup profits. Home loan interest rates charged by the major banks to new borrowers are outpacing official cash rate increases. According to mortgage broker Finspo, as reported in the Financial Review, the country's largest four banks have lifted the rates offered to new customers by 32 basis points more than the Reserve Bank's official rate rises since the start of the year on basic home loan products. That's a significant turnaround from the ultra-competitive pricing last year, when actual rates increased 23 basis points below the central bank's 3% rise. And the big four banks are also lifting fixed interest rates fast, including two increases from National Australia Bank last week. According to Rate City, 1 year fixed term loans are now somewhere between 6.49% at Westpac and 6.74% at Commonwealth Bank. So we have had the double hit. We have had rate rises plus a dropping off of competition in the market.
It's an interesting point you made at the start there, Sean, about the fact that we might not realise just how good we have had it lately. So it's probably kind of important to keep that in perspective. Is all of this about profits now?
In short, yes. But before we all start slamming the banks, until the past few months, some of the home loans being written were actually unprofitable. The banks need to make money. They still have to do that. They have shareholders like you and I, etc. So they need financially sensible decisions around loans, what's happening. All this, of course, comes ahead of tomorrow's Reserve Bank board meeting, where there's little consensus about whether the official rate will rise again. Last week's weaker than expected inflation data may just tip the balance against a rate rise, so the central bank staying on hold. No one's really sure on that. Whatever the outcome, you can be almost certain that the lenders will feel under pressure just to keep lifting rates a touch.
Yeah, it's definitely worth having a listen today as well to Fear and Greed, the week ahead, with our resident economist, Stephen Koukoulas, who gets into all of this, doesn't he?
Yeah, he sure does. Stephen thinks there'll be a rate rise, but he's not real sure, and he is very typical of market economists out there. It's really split, given the labour market, which is really hot, and the inflation market, which is certainly cooling. It's still pretty hot, but it's cooling somewhat. And Stephen goes through all that and just explains what he thinks will happen, and plenty of other data points this week as well. Sorry, data points, not data, data.
That's good. Self-correcting and self-awareness, Sean. That's very good. Yeah, Fear and Greed, the week ahead is out every Monday, and it's a great look at what's coming up in the week in terms of the economy. Sean, how did local markets perform on Friday?
The S&P ASX 200 fell 0.7% on Friday to finish at 7,404 points, with the Real Estate Investment Trust leading the way lower. Now, the market last week, notwithstanding Friday's efforts, was up 1.2%, pretty much the same around the globe. The companies also not doing so well last Friday were the materials and consumer discretionary groups. The energy and utilities were among the best performers. In fact, Friday was just a bad day all around. Of the top 30 stocks, 25 lost ground, led by Fortescue Metals Group, which tumbled around 5%. Goodman Group, Aristocrat Leisure, Newcrest Mining, Rio, Telstra, they all fell sharply. A very eclectic bunch, that. The best of the large caps was Macquarie Group, up around 0.7%.
Yeah, and what's happening on international markets?
Wall Street continued to rise over the weekend, with the S&P 500 adding 1% and the tech-heavy Nasdaq up a couple of percent. That should help the local market this morning when we open. More inflation data out of the world's biggest economy shows further falls in the pace of price rises. That's really what's pushing Wall Street higher. Of course, it's earnings season over there. In terms of companies, Ford said it's pushing back its rollout of electric vehicles. That sent its share price lower. ExxonMobil, the oil giant's results for the fourth quarter were mixed, while both Intel, the chip maker, and Procter & Gamble reported better than expected earnings. In short, spending looks pretty resilient in the US at the moment. That's helping Wall Street.
All right, there's a bit going on. We'll be back in a moment with the rest of the day's business news. Sean, as we head into the final month of winter, the property market is starting to pick up pace with a big jump in listings over the last week and a national clearance rate staying above 70%.
Listings in Sydney were up 10% to 760 auctions, while in Melbourne, the rise was a massive 24% to 846 auctions. Sydney's clearance rate was 72.4%. Melbourne's was just under 70%. They're the preliminary clearance rates, of course. Part of the reason for the jump in auctions over the past week or so is property investors putting places on the market. But analysts said there just seems to be a more reasonable balance of supply and demand at the moment, or certainly over the past couple of weeks or so. We'll find out what that means for house prices in the next few days, with CoreLogic's July price data set to be released in the next 48 hours or so.
Sean, before I forget, remind me at the end of the show to share a piece of feedback that we had from a listener who cleared up a question that we had last week. And it is a very, very kind of creative response to a bit of a problem that you and I were having, but we'll do that towards the end of the show. Retail spending, Sean, fell in June by 0.8%, according to the Australian Bureau of Statistics, well below market expectations.
Some of the reason for the weak June spending was strong May spending. There was extra discounting and promotional activity in May leading up to the mid-year sales events. It boosted turnover for retailers in that month, but it sort of proved temporary because consumers then pulled back in June, which of course is normally a pretty busy month for retailers because of those mid-year sales. The big reversals came in department stores, clothing and household goods, while takeaway food actually went the other way. That did pretty well. It all points to higher interest rates certainly working on slowing the economy, Michael.
Now, Sean, this was a terrible story that developed over the weekend. The 4 men feared dead after a defence helicopter went down in waters off the Whitsunday Islands have been identified.
Captain Daniel Lyon, Lieutenant Maxwell Nugent, Warrant Officer Class 2 Joseph Laycock and Corporal Alexander Nags were members of the Australian Army Aviation's 6th Aviation Regiment based at the Holsworthy Army Barracks in Sydney. Search and rescue teams have continued searching for the crew of the missing MRH-90 Taipan, but it's feared the crew members are unlikely to still be alive. Chief of Joint Operations Lieutenant General Greg Bilton said the large-scale search could be impeded by the conditions in the Whitsundays, which is renowned for currents. Exercise Talisman Sabre, which involves more than 30,000 personnel and in which the 4 were taking part when their helicopter went down, resumed last night.
Sean, Prime Minister Anthony Albanese on Friday said the government will reintroduce its $10 billion housing bill into the House of Representatives once Parliament resumes next week.
The bill's expected to be debated and passed through the lower house before it will head to the Senate. If it's rejected for the second time within 3 months, it will fulfil the requirements needed for a double dissolution. This would give the government the option to call an early election, which would dissolve both houses of Parliament and send voters to the polls. Albanese refused to rule out the possibility of a double dissolution late last week, but he did say there wouldn't be an election this year. The bill aims to inject about 30,000 new social and affordable homes into the market over 5 years through an annual $500 million investment.
Now, I mentioned this one at the top of the show, Sean. How about this? Little-known 42-year-old Melbourne cryptocurrency entrepreneur Russell Wilson has reaped most of the $700 million in dividends paid to shareholders of cryptocurrency firm CoinSpot in just 2 years.
So cryptocurrency exchange and broking private company CoinSpot, which you may know because it sponsors the AFL club Western Bulldogs, you see its name there, it's made big profits and they've mostly been paid out as dividends to several members of the Wilson family, headed by Russell Wilson. Now, this has been going on for the past couple of years. Documents lodged with the corporate regulator over the weekend and obtained by The Australian show CoinSpot has emerged from basically corporate obscurity to be one of the most profitable private companies in the country. And, given the dividends he's earning, Wilson's going to be close to hitting the list of richest Australians. CoinSpot parent company Casey Block Services recorded a $292 million net profit on $503 million revenue. What's that, Michael? 2 times 29? Help me out there.
That would be
58. Yeah. So what's that? A 58% profit margin. It's pretty good. That was last year. The year before, it made $334 million. Now, a total dividend of $336 million was paid out in 21, then $282 million last year. There was the year prior to that, must have been $81 million was paid out. Quite remarkable amounts of money and profit margins.
Probably the most terrifying words you can say to me on this podcast are, help me out, because instantly my palms start to sweat. Oh God, I've got to do math. Either got to do maths on the fly or supply information about something that we have discussed before. And it's like, there's just so much potential for it to go terribly wrong. And even the maths today was pretty steady, even though it was a pretty basic calculation.
2 times 29? Yeah.
But we got there.
We got there.
It's the start of the week. You can't expect to be on the ball on a Monday.
And the weather's been good around most of the country, and so everyone's been relaxed for the weekend, and so we have to come in so early. Yep. So what I find exciting at the moment is that when we finish the show and you go and have your cup of tea, just the birds are chirping, just starting to see light outside. And I mean, normally it's about in the middle of winter, the show finishes and it's about half an hour before the sun starts to rise. But by the time we finish this, sun will almost be there. Well, sort of.
It feels like a very long-winded way of saying, we're a little bit slow with figuring out what 2 times 29 was, but we got there in the end, and don't blame us because the days are getting a bit longer, so everyone should just be pretty happy right now.
Yeah, that's it. Thank you.
Good. International news time, Sean. Global airlines are reporting big profits on the back of soaring ticket prices, and even a weak global economy can't slow sales at the moment.
British Airways owner IAG said trips across the Atlantic to leisure destinations had been particularly popular as customers prioritised holidays, while Air France KLM said high-spending holiday makers were filling business-class cabins, according to a report in the Financial Times. The strong bookings defy a sharp rise in airfares, which are up about 30% in Europe this year. In the US, United reported a 42% increase in revenue from flights to Europe in the latest quarter, compared to a year earlier, while Delta reported a 65% surge in sales of transatlantic flights. And it isn't just the airlines benefiting. Royal Caribbean, one of the world's largest cruise lines, last week said its business was firing on all cylinders because of exceptionally strong demand for cruises and a step change in bookings and prices.
Isn't that good to see cruising going so well, considering it was so heavily impacted by COVID?
Yeah. And so many people, I've never been on a cruise, but so many people enjoy cruises. And I think it's fantastic that they're back.
Yeah, indeed. Now, Sean, I don't know what to make of this story. Micro gyms are all the rage in Singapore, apparently, with bright yellow containers. They're a little bigger than a shipping crate, popping up all over the place for individual workouts.
This is genius. It really is. So each micro gym, has a treadmill, weights, and other equipment. And importantly, in Singapore particularly, it's air-conditioned. Users book them via an app. There are now around 60 locations across Singapore. A 60-minute session costs around 15 Aussie dollars. And the two companies running the micro gyms are startups, and the largest is a group called GymPod. It's got 120,000 registered users. It's actually pushed into the US. It's got a couple of micro gyms in Chicago. I think it's looking at California, New York, Florida, etc. But these bright yellow micro gyms are starting to pop up all over Singapore. You can just go for a workout. What a great idea.
Yeah, it's novel, Sean.
Novel.
Do you know, confession, last Monday, a week ago today, I did my first ever Pilates class.
Oh, how'd you go?
It was good. It was tougher than I was expecting it to be.
Yeah.
And I thought, you know what, I'll go again on Wednesday and then on Friday of last week. No, my second session is now today.
Yeah,
I needed a full week to recover.
Right. Yeah. And I've seen Pilates and I think that looks too hard for me.
Yes, and I'm the least flexible person. I haven't touched my toes in years. So anyway. Now, last one, Sean. Subway, the fast food group, is running a mega promotion in August. Win free sandwiches for life, but only if you commit to legally changing your first name to Subway.
And, well, the chain will choose a winner and then they'll pay the legal fees so you can assume a new iconic identity, i.e. Subway Thompson. I like it, actually.
It actually sounds kind of cool.
Yeah, Subway Aylmer. Well, that's not bad either.
You could just shorten it to be Subway Aylmer.
Subby. Oh, that's very funny. Let me tell you about Subway, though. It's one of the world's largest quick service restaurant chains. It's got about 37,000 franchise-run locations in more than 100 countries. If you were listening last week, Michael, you would remember, of course.
They're number one.
They are in Australia, largest quick service restaurant in Australia. Now, the company is worth about $10 billion, but it's really fallen back behind its competitors since about 2015, in part because of competition and a decline in consumer ratings, according to a report in Bloomberg. Subway eventually appointed a new CEO in 2019, embarked on a turnaround, including upgrades to its restaurants, menu, and digital offerings. According to Subway, the changes are working. Last year, the company said guests surveyed described the brand as updated, energetic, and innovative. Mind you, same-store sales jumped 12%, so they must be doing something right.
That is pretty impressive. Up next, Sean, Fear and Greed Daily interview. You're speaking with Mark Freeman, Managing Director of the Australian Foundation Investment Company.
All about what Mark expects in the upcoming June half profit season. Michael, before you give me the sign-off, tell me, you at the beginning of the show.
Oh, I teased you, didn't I? Yes.
You did. What was it?
Yes. So on Thursday or Friday, we were talking about Rio Tinto, I think it was.
Yeah. Iron ore, how much the amazing amount they ship.
The extraordinary amount that they export. And we couldn't quite get our heads around how much, 48.5 million tonnes was.
Yeah.
And just kind of how many ships that would be, or how many kind of trains that would, just to try and kind of visualize it. And anyway, we received this note from Matt, who is a listener. He sent it via email. He went to fearandgreed.com.au and sent us a note. He said, long-time listener, first-time contactor. Great work. Keep it up. Following the discussion this morning around Rio Tinto shipping 48.5 million tonnes of product, there was what I thought an inappropriate unit of measurement to describe how much stuff 48.5 million tonnes is. With that in mind, I thought I would provide you both with an appropriate unit of measure. He said 48.5 million tonnes of iron ore is the equivalent of 259 rounded down Boeing 747 aircraft piled on top of each other. This is based on the widely used dry mass of 187,000 kilograms as opposed to the variable loaded mass. Now that we've cleared this up, I hope in the future that you are now well enough informed to adequately describe to avid listeners how much stuff extremely large quantities of mined goods equate to. So now we have a new standard unit of measurement here, and that is, how many 747s is that?
Oh, I love it. Unloaded.
Yeah, it's a very visual thing. So now I just picture Rio Tinto exporting planes all around the world. I don't know whether Matt has really helped us out there, but he has certainly won our MIA for today, Most Enthusiastic Advocate, which is, of course, a fantastically glorious title to hold on a Monday. Thank you very much, Sean.
Thank you, Michael.
It's Monday, the 31st of July, 2023. Make sure you're following the podcast and join us online on LinkedIn, Instagram, X, and Facebook. I'm Michael Thompson, and that was Fear and Greed Business News. Have a great day.